Hello friends, welcome back for more Ethereum analysis, and let's just dive straight on into the charts and see what's been going on. Thank you so much for joining us for today's episode, and thanks for liking and subscribing. Hello Rocket Cropticians, and we are looking at the 24-hour chart just here, and you can see the story was of yesterday where we said, hey look, we're breaking out of this this triangle formation that we had here, but we're not going to get super carried away with it. We've got a measured move, like, you know, we could make a measured move off the back of this, but we're not going to anticipate that actually happening. All this sort of stuff that we were talking about yesterday has all come to pass. So isn't that just lovely? Yes, it is. Now, none of this is financial advice. I'm not a financial advisor. I never give financial advice to anybody. I don't know financial. I don't whatever jokes about that. But you can see yesterday what we were looking at is would this be some sort of fake out? Could have been. So we were bearing that in mind. Could we actually close up out here for the day and then come back down subsequently and test off of this area here? Well, we didn't do it on the 12-hour, but did we do it on the 4-hour or the 12? Oh, sorry, on the 24-hour? Did we do it on the 12-hour? Kind of. You know, we were up here testing around that area. In fact, yeah, we did. And then the next 12 hours after putting the video out, I suppose, you know, this downward candle came down, retested off here, and gave us the opportunity to open up back up above it, having retested this downward sloping trend line as support. So that all happened. That's all jolly good. What did we see happen next is the prices went up to our target of 241 and offered up a great time to take profit on your Ethereum trades had you been trading out of this sort of so-called breakout here. And well done to you if you were doing any of those things that we've of course been talking about on this channel for a very long time. So well done to you if you're following along and doing all that. Of course, it's your own decisions. I mean, I obviously point out in advance that I'm not a financial advisor, none of this is financial advice, and these things here, you know, their potential resistance and potential support lines, you know, as the prices move towards and beyond them. But we've been talking about them as being profit-taking lines and all the rest of it. And of course, anybody who was anticipating a potential upward movement in the prices and got in at 211 or so, 212, and then didn't take profit at 234, cheeky, you really should have, and then held on to their position when it came all the way back down to the 219, has been very much vindicated by the prices going up to 241 and them getting a fuller move on their trade. Now, you didn't have to trade it like that. It would have been absolutely acceptable to have taken profit in at the 230 level, which would have been wise. And indeed, if you were also thinking to yourself, well, hey, look, we've broken out this area, I want to get in on a trade, 230 here being so close to this downward sloping trend line would have been an area where you could have got in at, but it would have been wiser to get in at here, of course. But now looking forwards, 230 becomes that area where yet again where you would be thinking to yourself, maybe we'll get in here, maybe it'll come back down here, retest off of this. Now that makes it easy to manage your trading, because should we come back down to this line here and break on through it, then you know you've got a clear area where you can manage your risk. Again, not financial advice, I'm not a financial advisor, and when you do these things yourself, you draw them on the charts, you probably want to do them with a degree of more accuracy than I myself do, because I tend to just do these fairly sloppy because these are just guidelines, okay? But a lot of people like to be sort of, you know, precious about these things and whatnot and put them in exactly the correct places and take exact measured moves off them, and that's totally fine. It works really well for a lot of traders in the world. It's a really effective and correct thing to do if that's how you want to do things. So if I was doing this charting myself, you know, watching me as one of the Rocket Cropticians in the world, then I would be thinking, well, I'm going to draw this in, I'm going to try and figure it out, going to try and get it accurate and not just slap it on there like Rocky did himself, and we'll look and we'll see. Anyway, that's not financial advice either, but that's what we're looking at today. Well done to the prices for having done that. Of course, we need to establish the prices above 241 in order to look towards the upside and try and go towards the upper end of this descending broadening wedge, where we have this other line of price taking target in around 255, which would be the next port of call should we make it above there. But of course, in the meantime, we're probably looking towards, at the very least, coming back down and retesting off this 21 exponential moving average, going down here to 230 or so, and seeing how things go. Now, in terms of this here, did we get rejected off it on our first pass, the neutral line on the RSI, as we so often anticipate that we would? Well, yes, we did back there on the 2nd of March, came down here and came up and got through on our second pass. And like we said said in yesterday's video, we got 2 for 1 on that and broke through up above the exponential, the moving average I have here on the chart. You can see my settings are 14 and 12, by the way, if you're interested. And then I go back, I anticipate the prices will probably retest off of this area again. That could be in and around that 230, or of course the testing off of the previous downward sloping trend line. So we'll keep an eye out for all of that and see how it evolves over the coming days. In terms of the stochastics, we snaked around a wee bit around each other, then came back up into this area. Could we of course retest off of this zone? We could. Stochastics not necessarily going to do that, but you can see that there's sometimes it gets a little bit of, you get a little bit of indecision around this area that can be reflected in the stochastics in one way or another. Could it just be that we've actually managed to overcome all of the recent sort of need for consolidation, need for correction, need for the oscillators to reset, and that we could just start trending towards the upside? Yeah, absolutely could. And like I say 10 times a video, not financial advisor, not financial advice, but overall really things are looking very healthy, very good. In terms of the longer term sort of buy it, hold it type perspective, then yeah, sure, I think things are pretty good overall, and that you could probably just be patient and wait and get up towards this area. But we'll not count our chickens before they hatch. Of course, we've got the coronavirus in the world, we've got massive drop downs in the stock markets around the world, 3% again off them yesterday, and actually all of these things in crypto are still risk on assets. They're not actually safe haven assets currently, so that's to be borne in mind. Okay, and that's really everything that we need to look at. You can go down to the 4-hour chart. Of course, I can point out that here between this area and this area on the stochastics, you've got bearish divergence, and on the MACD you've got bearish divergence on the 4-hour chart. So that's 2 out of 3. And of course, what do we expect then as a result of these things to happen? Perhaps we'll come back down and retest off of this line. We have just gone up above the 200 simple on this time frame, so those things to be borne in mind, of course, as well. And we got rejected off of the bullish control zone on the RSI in our first attempt. Now, will that actually transpire into some sort of downward trend for the longer term? No, that's not what that means, but it is a slight warning sign, and warning signs are great if you're looking to get entries in lower than where the current price is. And like I say in almost every episode, or not every episode, but I say this frequently, trading in the middle of a range is rather rubbish. And if you want to do that, then you're more than welcome to, but I far and away prefer to trade around clear areas of support and resistance at the top and low ends of ranges. Okay, so that'll have to do for today's episode. Thank you so much for tuning in. I'm looking forward to getting some more 2 for 1 Bitcoin. I always say 2 for 1 Bitcoin. Don't know why, it's a habit. I'm looking forward to getting some more 2 for 1 Ethereum if the prices do start to trend towards the upside, and there'll be a couple of opportunities for that, because I reckon you could even get up here to 255, back down to 241 again easily enough in the future. So never rush into things. Avoid FOMO, avoid greed, avoid fear, all that rest of stuff, and just keep calm and carry on. Thank you so much for tuning in. Welcome to the family if you've just joined us for the first time. And and I'll not be doing a video tomorrow, by the way, just probably because I'm going away for the whole day. So I'm saying that in all my videos today just so people are aware. Thank you so much for tuning in, and I'll see you in the next one.